Welcome to the Data in the AI Era podcast. I'm Peter Vindra, and in this series, I sit down with data leaders from the financial services industry to explore how they unlock the full potential of their data amidst the challenges and opportunities of the AI era. And I'm delighted to be joined today by Ashok Reddy, Chief Executive Officer of KX. No one can deny the potential of AI. While it promises transformation, however, for many, progress seems to have stalled. The problem isn't our ambition, it's actually our infrastructure. If your systems can't operate in real time, then you and your AI can't either. Unlocking real-time intelligence for us means understanding not just your data in the moment, but how it changes over time. In this episode, we're tackling that issue head on. What does it really take to build for the real-time economy? How do you break through the AI sound barrier? And why is time the most overlooked dimension in AI today? We're going to explore why organizations should harness time-aware AI and why temporal AI could be the key to building smarter and faster systems. Ashok, welcome to the show. Thank you so much for joining. Could you tell our audience a little bit about you, your role, and what you are passionate about?
Yes, great to be here, Peter. I'm the CEO of KX, based here in New York City. My background has always been in technology and applying that to solving business problems. And specifically in the context of AI, I actually went back to school a few years ago, got a master's in AI and machine learning from Georgia Tech. And that was to understand much deeper, not just having a surface level. And that has given me a different perspective. Before all this hype around AI, what is really AI and really bringing that to bear in terms of solving problems for customers. And so that's really what I'm passionate about, how to apply technology, in this case AI, to solve real world problems, which are typically seen as impossible for customers. And how can we make it possible?
Wonderful. Welcome. Before we dive in, I wonder if we could just start by clarifying the difference between time series, time aware, and temporal AI, which may be a phrase that's new to our audience today.
Absolutely. It's a crucial distinction in terms of the different aspects of time series. Time series is really typically hindsight. Time aware is about reacting or reaction. And temporal AI is really about foresight and really helping to understand where we are going and what to do about it.
Thanks, Ashok. I think that's an extremely helpful distinction and useful for us to hold those things together as we talk more about where we're going with all of this and what's different about what we can do now from where we've been in the past. But before we get there, I wanted to just talk a little bit about the rise of the real-time economy. This is a phrase that we're hearing more and more. We're using it ourselves. You've described the world that we're living in now as the real-time economy. I think most recent market events tell us that things are happening in shorter and shorter time frames and time windows. But I wonder if you could just articulate a little bit about what does it mean to you and why is it becoming so important to us today?
Yeah, I think today when we look at how to compete, look at data-driven economy, and we talk about data, but typically data, you can look at what has happened in the past and analyze it. But we act in real time in the sense the decisions we make or what we do today, it's really about real-time economy in the sense, how do you collapse the gap between the data and the insights you get from the data and the action? In capital markets, for example, or whether it's aerospace or manufacturing, time, everything in terms of real time means milliseconds and nanoseconds matter. And it's not just about speed, it's about contextual speed. So knowing not only what's happening, but why and what's next, and how many people can make a decision quickly in real time. And that I think is really very important in the real time. Without a real time economy, many people are looking at, let's say, if you're in capital markets trading, you're finding alpha and trying to look at historical data, doing back testing and trying to come up with models. And then you're using that models after the post-close to analyze it. But in real time, you really are not only using what you learned, you may have built models, but as new information comes in, the new order books, and you're adapting and you're continuously updating your strategy. So that I think is what gives the alpha, because in today's world, everything changes so rapidly. And if you saw this last couple of weeks ago, some of the things what we see in the market, in one particular day, volumes changed. It was almost the stock market went down by $2 or $3 trillion. And then by end of the day, it was up $3 trillion. And that's the true economy. The real-time economy means that things happen. You still are using your historical information and what you learned, but you really need to react in right now and in present time.
If I can dig into that a little bit, Ashok, one of the things that we focus a great deal on is building algorithms. And algorithms are typically derived from historical experience. We understand what has happened in the past. We're anticipating events and actions in the future. And so almost inevitably, our algorithms are based in more historical data than in real-time data. I wonder if you could just talk a little bit about how do we blend those things together? So how do we effectively update our algorithms almost in real time? Or is that even feasible given what we're describing? How do we
Yeah.
bring current data with historical data together to improve our decision making?
Yeah, I mean, it's a very crucial question. I think generally, when people think about algorithms and data, we look at let's look at the data what we have, and then you develop algorithms because you're bringing data to where you create algorithms and analytics. And by just doing that itself, you first of all, there's time a component of collecting and storing information, and then you need to bring massive amounts of data to where you're running the algorithms or developing algorithms. And so that itself causes a lot of latency between collecting the data, storing, and then bringing the data to where the algorithms are. But I think what your point is to me, it's how do you collapse that? Why do we need to,
Mm-hmm.
on one side, process data, collect data, store, and analyze somewhere else? How can you do that together? So it's really, the idea is really about data is the algorithm, which means that you're actually running algorithms or developing algorithms where the data is or if data is streaming. So if you have existing data and then you are streaming new data coming in, what if you're able to actually develop the algorithm or run the algorithm where the data is? And so to me, that's the powerful aspects of it. That's how you make the real-time economy work because you're not moving data around and then you're trying to process and analyze separately. Then you have to bring data to compute versus how do you bring compute to the data? And that's really the data is an algorithm in that case.
Something that we've called this podcast Data in the era for the very reason that you're highlighting, Ashok, which is really the essence of success in this accelerated economy, the real-time economy that we're talking about, is really how do we leverage the data that is at our disposal, whether historical or real time, and be able to act on that data in situ without having to manipulate it, without having to process it, without having to collect it. All of that introduces latency and delay. And I think one of the phrases that I've heard you use is that KX turns data in motion into action in real time. And I think that's what you're articulating. And that's what really separates what we're doing perhaps from what has historically been possible and what makes this so compelling in the context of this high volatility environment we're experiencing. But I think we can recognize it's not just in financial markets. This issue of real-time decision making is now affecting really every industry, is it not? Are there other areas that come to your mind where this is so critical for us to be able to operate differently?
Yeah, I think if you look at every industry, the data in terms of the amount of data we are processing, sensors, information, whether if you think about semiconductors and high-tech manufacturing, what people are doing in there in terms of the fabs and how they collect data, the process data in an air-gap solution, it's not even connected. They need to make decisions very quickly, and every batch of whether you're creating a batch of semiconductors, it's a lot of money you're spending and it's worth millions of dollars. It's bringing the data and algorithms together and being able to do that in real time will help people to find things, anomalies, and it's almost like a predictive maintenance. So you're finding things before they happen.
Mm.
And that saves not only the costs and the money, it's basically people are using these things in the chips are used in healthcare, life sciences, and medical equipment and it's saving lives because of that. I think you are able to find things before they happen. And then if you then translate to, I will go to the next scenarios is whether it's the life sciences in terms of finding new drugs and evolving them. There is so much information people are collecting in different clinical trials and being able to assign what's the effective drug in quickly identifying that from millions of people. And now once you even get approval, and actually start administering the drugs, people will want to say, what is the real world evidence? So now you can track information coming from people buying those, taking those drugs from CVS and Walgreens or whatever. Now you got millions of people using them, and you have personal devices you can monitor. You can see not only just getting approval is one stage of the clinical trials, but actually is it effective and the side effects, and getting into a much broader data sets. So real world evidence data is much bigger petabytes of data you have to process. So it's still the same. You need to apply algorithms to data, and you need to be able to do it in real time. And these things can apply in almost every industry.
Yeah, very well said. And I think one of the common patterns here is just the sheer volume of data that's available to be processed and to be managed. And that leads to considerations around speed and performance and an ability to handle that. So perhaps to segue into our next segment of discussion here, I want to explore this concept of breaking the AI sound barrier. That's a phrase that you've used. You wrote a blog, which I strongly encourage our audience to go check out on kx.com. But I wonder if you could help us understand a little bit more about what you meant when you said AI sound barrier and why so many firms are struggling to break through it. But even more interestingly, who are the people that are breaking through, and what is it that's setting them apart? Why are they able to take advantage of AI in a different way? And what are the learnings from that we could help share with our listeners for our podcast today? So maybe we start there. What do we mean by the AI sound barrier?
Yeah, I think it's the moment where ambition of AI, for example, hits the infrastructure limits. What I mean by that is we have lots of data. Everybody is excited about the different models, but you try out some pilots and get excited about the results of it. But when you put those systems into production, into real time, now you're trying to start processing, and it's like they're flying a jet engine bolted to a go-kart. It's like
Dangerous.
architecture can't keep up because the front office, it's the promises what everybody gets started with a small use case or whatever they're trying to pilot. It won't work. We work with, to answer your question, if you just look at last 2 3 weeks, in fact, I get emails from our customers because we have, for example, the bulge bracket banks, which are, there's only less than 10 of them in the world, which are the most prestigious investment banks who do most of the trading in the world, algo trading, asset management, others, and they can scale. With the amount of volume changes just in the last month, with all the tariffs related volatility, we went from an average 15 billion trades per second day to 30 to 50 billion. And this affects everyone. And it so happens that not one of our customers, every bulge bracket bank, investment bank and trading, all the systems handle this. And they're applying AI machine learning for the trading or algo trading. And I got emails from the customers. I was concerned, are they able to handle it? And they said, thanks to KX, we are not going to have a problem at all. And we see that with crypto customers. Crypto is sometimes we underestimate. Some of the largest banks in the world may process 80 billion records per day. Some of the crypto market making is happening at 800 billion records per day. And how do you process that? They're much smaller, but they're processing a lot more information. And to me, that's the sound barrier. So do your infrastructure can keep up with that? And it's the rubber hits the road when you actually, if you want to drive a Ferrari and if you're driving in the New York City, where I live, you know that while it could do it, but it cannot go at the speed, or your trading infrastructure cannot keep up. And that's what keeps a lot of our customers up in the night. When these things happen, can they keep up? You may want to place a lot of trades, or it could be in other industries. But anyway, that's the sound barrier I talk about.
And if we can think a little bit about how firms are applying AI today, and where, to your point, where the rubber is hitting the road, I think you said a very important thing, which is that we've seen a lot of pilots. There's been a lot of small scale activity seeking those use cases. And I was reflecting recently on Gartner's description of the value wheel to talk about different ways in which AI can generate value for organizations. And for many, we've started in the area of productivity, and particularly personal productivity, which is of value, of course, and it has a lot of potential for improvement. But every firm is essentially going to take advantage of those common abilities to improve the way that individuals are operating. But it seems that the higher value creation comes when we think about efficiency, when we think about product innovation, when we think about different ways to actually operate as a business or even as an industry. And so I think then about where are we starting from? What have we got in place today? When we layer on AI, what's happening? Where are we hitting those barriers? I wonder if you might just contrast for us a little bit of the sort of the world before KX is introduced. You just shared that the largest banks in the world are relying on KX to help them deal with these tremendous volumes of data that they have not previously had to handle. And what happens? What does the world look like after KX, particularly when it comes to AI?
Yeah, it's just the way I think about productivity is initially how everybody's, especially generative AI. I think everybody gets excited that you can use that to generate summaries of documents, create PowerPoints, or you're able to generate some creative things based on what you're trained the model on. Obviously, those things are helpful. It'll help people to start being productive. I use that all the time myself to look at different scenarios. But what is important is really then, I think people have now, every company we work with, enterprises especially, have thousands of use cases. Everybody's experimenting. But then when you come back to what's the real value, what is it going to drive the transformation for the company? Is it really driving the top line profits? Are we creating new products and new revenue streams? That is where I think when Gartner talked about this is really you move from productivity while you want to do that, but the real game changer is transformative, high value use cases. What I mean by that is, as an example, if you are just, let's say, I would stay with capital markets, for example, the trading desks and others are using some of these things to today summarize for somebody. If I'm an analyst or investment sell side, I may be giving advice to my clients around what their portfolio should look like and use the something like a chat GPT or whatever, summarize everything which is happening around those companies, stocks, to recommend and explain to them what's happening based on the earnings calls and other things. But that's not differentiated because, yes, that helps somebody to get that view, but anybody can do that. Every investment bank can do that.
Yeah.
But so if you want to differentiate yourself, the next level is, oh, tell me, just like I said, you're just looking at what happened and what everybody is saying about it versus what's going to happen. And how do you know that this is what your particular portfolio should be? Am I optimized for the right portfolio? And if you have 100,000 clients, how do you scale that? So what that does is transformative use cases. In this case is not only just summarizing things, what you're finding based on a LLM has found based on what everybody is saying, to actually taking the data, let's say in this case, the time series data or a temporal information about the particular portfolio of stocks you are considering for a client, and actually doing the analysis of that and bringing that, and then go back to the LLMs and trying to get more context around this information and combine all of it and be able to use now what we're calling agentic AI to take action. So the closing the gap between the real-time economy is not just trying to find insights, but actually making it actionable so that I can actually use agentic AI now to go on. You have an automated way of everybody getting a live portfolio view of where they are, how it's doing, and in real time getting a context. So that to me is a transformative use case, what we are seeing with our customers, where you can go, it's almost like a chain of thought. You start with what's happening to what could happen, and then combine that and also take action in real time on an ongoing basis because you have an agent representing you. In this case, I would say a portfolio research assistant agent who is working on your behalf 24/7.
That's a huge game changer, isn't it, really, for the industry as a whole? And I think as I think about the business impact and the economic impact of being able to scale out an individual who today might be handling a small portfolio of stocks on behalf of their clients, to be able to both expand the number of stocks that they could potentially analyze and manage, and at the same time deliver a highly personalized, customized solution to each of the clients is clearly going to separate winners from losers in the space. And I can imagine there are many other case examples of that type that are going to emerge as a result. But the core you've highlighted, and I love that we've come back to the beginning here, is really the ability to marry the hindsight that comes through analysis of time series data with the time aware ability to react in real time and to use temporal AI to deliver foresight, look ahead into the future and make decisions today based on what we can anticipate through analysis. That last one is the one I want to talk about next, which is temporal AI, a phrase that has come into parlance, but it's probably not familiar to everybody on our podcast today. Would you mind, Ashok, just giving us a take on what it is that means to you and how we should be thinking about this in the context of the broader AI landscape? So let's start then. What exactly do we mean when we say temporal AI?
Yeah, I think that fundamentally, when you think about AI, it's about machine learning and deep learning or whatever. You're learning for something and then using that to make better decisions or generate something. But the ability to reason over time is what we're missing today for most part, because when you use any of the generative AI, it's learning from static information. Maybe it's doing it, we can train a model, but it's at any given point, it's static. And time or a period of time, how things change and how you want to compare things, what happens, that's all based on memorization. So temporal AI is that missing link in where most of the AI infrastructure is. It's based on static models and rule-based engines, whereas temporal AI understands how systems evolve. You're learning models and potentially how it can happen in over a period of time. And that's how the world is. It's a temporal world. There's cause and
Of
effect.
course.
And that's where the real business value lies, because you're able to predict, you can simulate and adapt as things change. And I think that's one of the things what I'll say when you look at before temporal AI, you got time series tools and others, you can do some trends, but you don't know how the models are going to work. And you learn based on something. Machine learning is about learning from the past for most part. When new information comes in, the temporal AI learns from a dynamic system behavior and it adapts. That adaptation is key on the fly. And to me, that I think is where the decisions are reflected, not just based on where you are, but where you're going. So that I think is a key aspect of the temporal AI.
Thank you. I feel as if there's another dimension to this, which is the way in which we can interact with data is also evolving. And I'm thinking here specifically about something that generative AI has brought to us is this idea that we can interact with information using natural language, and being able to operate in that way has reduced the dependency on coding to get to the answers that we're looking for. And I think our vision here is to empower every member of our customers in teams to be able to get more value from the data that exists in their organization and to bring better solutions to their customers as a result. And I'm just thinking here about skill sets. To be able to do the things that we've been talking about, Ashok, requires a combination of people inside of our customers' organizations. And as we focus on front office in the financial services, we're primarily concerned with enabling asset class managers to be able to leverage data and intelligence effectively. But AI initiatives are often originating from a centralized sort of corporate top-down mandate that says we've got to be able to use AI more effectively. And often that's manifesting through the CDAO or the CDO or the CIO office, which we've traditionally considered to be more in the back office, underpinning the business. I wonder if you could just talk a little bit about how you see these two worlds coming together to deliver this new value, because it seems to require skill sets and experiences that manifest in different parts of our customers' organizations. What are your thoughts on that, Ashok?
Yeah, I think it's a really good question, Peter. I think one of the way to think about AI and from a front office, it's a knowledge work. And so people are thinking about outcomes and what they need to get done. So it's really about translating that outcomes to using natural language way of doing this to look at what do I want to do? Like we talked about the use case around wealth management. So if you want to know what's the right portfolio I should recommend or optimize for my client and take the specific risk factors the client is willing to take and what are the parameters. So in this case, if you're able to describe that in the natural language of doing that and then provide as input your AI, use AI, and so you know what you're saying and you know what the outcome is. But now that needs to translate it into the back office and systems. The data and technology many times are not designed to answer the questions that way. So what one has to do is to think about, it's not about what can I do with AI? Instead, you start with the problems of customers. In this case,
Yeah.
if I'm a CDO, how do I help somebody to do a better trading decision? Or how do I come up with a portfolio optimization? What are the things what we do to support that? I would say, for example, back testing is something what people do to take some strategy. I go and do back testing to come up with test that and simulate that to see if that strategy would work. So that's the way to think about it is Today, when I want to backtest multiple models and come up with the answer, it takes maybe weeks. Can AI, in this case, help me to do it better and faster, more accurately? And that will go back to the natural language. If somebody says, give me this answer or tell me what I need to recommend, how do you compress that and be able to give them a much more accurate and timely response to them? So that's how you bring those together. One, you start with outcome and no need to translate that into a technology directly, but you use the AI, the something like a natural language interface and agentic AI to bring them together. And then you have got infrastructure built more adaptive, which needs to be programmable, and you need to be able to have APIs and others to be able to connect to different systems, whether I'm looking at historical data, whether I want sentiment analysis, unstructured data. Those things should be possible to bring the right type of data to answer the questions. And in this case, again, what are the things, processes we have in place today? If I'm doing quant research, if I'm doing backtesting, how can AI help me do that better, faster, and cheaper, more efficiently? Not start with, let's see what AI can do. What problems do I have today, and how can I do that better with AI?
I think that's a brilliant way of thinking about the dilemma that many organizations have found themselves in this AI era, where we've had this push to say AI makes many things possible. Let's try and find use cases for AI. And in some cases, there's been an overlap with the business outcomes that are required. And in other cases, those pilots have simply died because there's not enough traction, there's not enough compelling reason for implementation. And I think you've rightly pointed out, it's when these two come together that we see the real value creation. I've often thought that the A in AI really stands for augmentation, not artificial, because everything we're talking about is really about augmenting human decision making. How do we automate it? How do we scale it out? How do we improve it? How do we enable better outcomes? And that's really about leveraging AI as an augmentation tool to transform the way that we think about what's possible, and also that we manifest into our current processes to improve outcomes for our own businesses and for our customers. Ashok, as we're drawing towards the close of our session today, I wanted to spend a few minutes at the end here to talk a little bit about the future of real-time AI and where technology is going. And if I could ask you to take the CEO hat off for a second and maybe put on the CTO hat for a moment and just help our audience to think about how this technology is moving forwards and what is it about it that excites you the most about the future that you see for us?
Yeah, and I think what really excites me is I think a lot of this AI, when you look at what we've been able to do, is to really try to replicate what humans are doing. But as you said, it's not about replacing humans. It's really those aspects of it which allows us to use AI to augment and extend what we can do so that we can focus more on things what really we can bring value, the creative aspects of it. And to me, helping people to focus more things like cognitive resilience, right? It's like we can respond in real time, but really it's about we all have a lot of things we do, mundane things, but doesn't allow us to really adapt and collaborate with other humans and be able to build better relationships if you're in the banking versus focusing on just trying to get other mundane things done. So I think this we talk about co-pilots, but really it comes down to collaboration pilots, right? You are collaborating using AI to basically AI and humans are working together. End of the day, humans will make the most critical decisions. But you have to think about automated things. There are a lot of things we don't have enough time for humans to react. And like algo trading as an example. In this case, how can we bring contextual, autonomous way of doing things? Because you still want human in the loop. Also, that our wisdom, we can only build so much time and we don't want to be up working 24/7. So that's why you want somebody like AI is your representative, the agents. So the context matters. It's almost like a contextual intelligence. So what we want is the more context the AI has to make decisions on behalf of humans, and that will help. So that's really what we need to do is to bring the future is about who can sense, simulate, and respond in real time, but with the right context. So the context and contextual intelligence is where I feel we will evolve to, and not as get worried about being humans being replaced, It's about humans are using AI and replace those who are not. And the ones who are using the right context and with the right empathy and everything else we can bring, and that will make the world much better place.
Thank you for that, Joe. What a great way to bring our time together to a close. I have to say, the concept of digital twins is one of the most interesting things that's happening in AI today, I think. And I'll just say, I'm very glad to have the real Ashok on this particular podcast and not Ashok's digital twin, which I also interact with through at other times.
Ashok GPT.
So yes, we're all very familiar with Ashok GPT here at KX. And there's so much potential, isn't there? This is such an exciting area of evolution. And I'm really looking forward to having you back for a future episode, Ashok, for us to talk more about some of the other related aspects which are crucial for consideration. But for now, I want to just thank you for joining us. Thank you for your insights on real-time infrastructure, the future of temporal AI in particular. Super valuable. If you, our audience, are interested in learning more about Ashok's ideas, I just encourage you to check out his Substack, as well as the blog series that we've been publishing on kx.com. We've got a link to that in the show notes, so please take advantage of that. If your team is ready to break through the AI sound barrier, then please come to kx.com or reach out to start the conversation. Don't forget to take part in our LinkedIn poll. We really appreciate your feedback. Today's question: what best describes your organization's approach to real-time data processing today? If you have questions or topics that you would like us to cover, please email us at podcast@kx.com. Thank you again for listening. Looking forward to seeing you next time.